In today's video, we delve into the intricate dynamics of the housing market, a landscape marked by significant shifts.
We'll draw on expert analysis from Jason Walter, offering insights into the latest trends and forecasts.
What numbers are driving these trends, and what implications do they hold for buyers and sellers? Plus, we'll consider the recent changes within the Federal Reserve that could reshape the market.
Stay tuned as we connect these dots and reveal how this all affects you and your financial future.
Let's dive into the unfolding drama of the housing market. Today's topic is critically relevant. New data reveals the U.S. housing market is facing unprecedented challenges.
Exactly. We'll explore alarming drops in homebuyer demand and soaring price cuts, and you won't want to miss what comes next.
So what's the crux of the matter?
The core thesis highlights a worrying decline in pending home sales, down 7.8% annually, marking the most significant drop in a year. This indicates a notable drop in buyer enthusiasm.
What additional insights can we glean?
We're witnessing a staggering 40% decline in buyer demand compared to peak levels in 2021. Coupled with price cuts averaging 6.6%, it's evident the market is struggling.
What's happening with home prices?
Over 25% of listings are experiencing price cuts monthly, pushing values back to mid-2021 levels. Even with these drops, buyers still feel homes are overpriced.
How does personal savings factor into this?
The personal savings rate has fallen to just 2.9%, which historically signals trouble for financial stability.
What can buyers expect in the upcoming months?
Many are postponing purchases until after the presidential election. With continued muted demand, we might see prices drop even further.
Are there any hopeful signs amidst this gloom?
Absolutely. If prices fall enough, we could trigger a surge of market activity, potentially hinting at a rebound sooner than later.
So what's the final analysis?
As we've explored, the current market landscape is stark, with dwindling prices and dampening demand. Yet, we might be witnessing a crucial transformation in the market.
And real estate professionals?
Agents will need to reevaluate their strategies in light of these trends. Staying informed is key for success in a shifting environment.
Let's jump into our next significant summary. The education sector is under serious strain, as shocking reports reveal widespread teacher layoffs.
Indeed. Our discussion will uncover the financial pressures faced by school districts, many of which now teeter on the brink of bankruptcy. What's driving this crisis?
What's at the heart of this educational crisis?
The key issue lies in the expiration of COVID-19 relief funds, leading to severe budget constraints and consequential layoffs across numerous districts.
What are the critical statistics we should be aware of?
This year alone, education job cuts have surged by a staggering 222%, with nearly 2,400 positions eliminated, signaling a dire trend.
How has the end of federal aid exacerbated the situation?
The cessation of federal COVID relief has resulted in districts scrambling to fill budget gaps, culminating in extensive layoffs as non-teaching staff become expendable.
What pressure are districts facing in terms of taxes?
Many are advocating for tax increases to combat this financial crisis, or they risk spiraling into bankruptcy within the coming years.
What does the future hold for education in light of these layoffs?
If these trends persist, we're likely to witness even more layoffs, particularly in non-teaching roles, which would erode essential support systems for students.
What potential long-term implications could arise from this crisis?
The ongoing budget squeeze raises alarms about potential bankruptcies in school districts, which would significantly jeopardize educational quality across the nation.
What takeaways can we glean from this summary?
Addressing the future of education is paramount. Immediate action is essential to establish sustainable funding mechanisms, lest we further harm our schools and students.
As we close, what might be the long-term solutions to prevent this crisis?
Engaging the community to advocate for effective educational funding reforms is essential. Let's keep this conversation going.
Let's dive into our next thought-provoking summary. Today, we examine the implications of the Federal Reserve potentially cutting interest rates.
Joining us is Nick Timiros, who will break down key facts on how these potential rate cuts could affect inflation, employment, and crucially, real estate investors.
What are the central insights from Nick's analysis?
The pivotal takeaway is that significant interest rate cuts are anticipated, but questions loom about the depth and speed of these adjustments, especially amid a volatile job market.
What's the latest on the Fed's anticipated rate cuts?
According to Nick, the pressing question is whether we can expect the standard quarter-point cut or a more surprising half-point reduction, which is less common.
How do inflation and job statistics play into this?
Nick notes that while inflation is trending down, the job market is slowing, leading to tension between stabilizing prices and maintaining employment.
What implications do these changes have for investors?
For real estate investors, shifts in interest rates could alter mortgage costs and property values, changes that may inadvertently reignite inflation in the market.
Looking ahead, what does Nick predict for interest rates?
Nick foresees that if inflation remains under control, we could witness further rate cuts in the upcoming year, impacting everything from mortgages to consumer spending.
To summarize, what's the essential takeaway?
Nick emphasizes the critical need to stay informed about the Federal Reserve's actions. As rates alter, so will the housing market dynamics and investment opportunities.
If you're getting value from these summaries, consider subscribing.
Like and subscribe to support our channel, ensuring you don't miss out on future financial insights.
Let's transition to Melanie Wright's latest insights concerning California's housing market.
Absolutely. Melody delves into the shifts in California's real estate landscape at what she describes as a pivotal moment. Buckle up.
What are the core themes in Melody's discussion?
The central thesis indicates signs of a faltering housing market in California, hinting at potential downturn risks following extensive growth. Critical data must be closely monitored.
What conclusions can we draw about price trajectories?
Melody observes month-over-month price declines in California, yet a rise in sales suggests the market is adapting to new norms.
What's the current state of inventory?
California's inventory saw a significant climb of 32.4% year over year. San Francisco alone witnessed a staggering 133% spike week over week.
What about the job market in California?
Currently, California's unemployment rate stands at 5.2%, notably above the national average, with considerable job losses in the information and professional services sectors.
How are government actions affecting the market?
Melody points out significant cuts in affordable housing funding, totaling $1.1 billion, raising concerns about the state's commitment to stabilizing the real estate market.
Finally, what trends are we seeing with consumer credit?
California is facing a troubling rise in auto loan debt, averaging $24,900, with delinquency rates trending upward, adding financial pressure to consumers.
What does Melody envision for California's housing market?
Melody cautions about potential price corrections arising from escalating inventory and continued price decreases. If these trends hold, market dynamics may significantly shift.
What concerns does Melody express for consumers?
Increasing unemployment combined with rising debt levels could heavily strain Californian households, impacting spending habits and causing ripples throughout the housing market.
To conclude, what's the overarching message?
Melody emphasizes the urgency for diligence in the California housing market. With shifting dynamics and growing economic tensions, significant changes are on the horizon. Stay alert.
We need your thoughts. What do you expect will happen next in the California market?
Share your predictions in the comments below, because this conversation is just heating up.
Time to set sail into our final summary. Today, we explore the sweeping effects of anticipated Fed rate cuts on the housing market.
That's right. Jay Brights from MinorityMindset brings his expertise on financial trends and the economy. Prepare for surprising insights.
So what's Jay Brights' core message?
The main takeaway is that the Fed is expected to cut interest rates soon, which could inject fresh demand into the housing market while simultaneously raising inflation concerns.
Let's break down those critical points, beginning with inflation.
Jay clarifies that despite lower consumer price index (CPI) numbers, it doesn't imply a decrease in prices. Rather, it indicates a slower rate of increase that consumers are still navigating.
What implications could these rate cuts have?
Jay highlighted that a surge of buyers could lead to an increase in housing prices, creating a paradox where lower rates may result in higher home values.
What speculation does Jay present regarding market behavior?
According to Jay, if demand spikes, we may see prices remain stable despite rising supply, defying common expectations.
What predictions does Jay offer for the market?
He foresees demand potentially surpassing supply, contributing to price stability, although navigating economic instability remains a wild card.
What risks accompany these cuts?
Jay cautioned that rising prices could reignite inflation, a trend everyone needs to monitor closely.
To summarize, what key takeaways should viewers remember?
Jay underscores the necessity of making informed home buying decisions while remaining adaptable to the ever-evolving market conditions.
What wisdom does he leave us with for future buyers?
Jay encourages viewers to think critically and analyze their options before making financial decisions. The future is uncertain.
As we wrap up, we want to know your opinion. How do you think the Fed's decisions will impact the housing market?
Drop your thoughts in the comments. Your insights could steer the conversation forward.
As we wrap up, today's insights revealed a concerning trend. Home sales are indeed plunging.
That's right. Jason Walters' analysis makes it clear potential instability looms over the market.
And while Cathie Wood believes Fed rate cuts could offer a lifeline, Jaspreet Singh warns us about buyer sensitivity.
It's a mixed bag, and understanding these viewpoints can empower viewers to make informed decisions.
Absolutely. If you found value in today's discussion, please like and subscribe for more expert insights and financial analyses.
And don't forget to check out our previous videos for more knowledge to help navigate these shifting economic tides. Thanks for watching.